Good afternoon. You're watching Businessworld Live. I'm Jes Delos Santos. Let's take a look at how the local bourse closed today, Friday. Okay, shares were poised to end higher today, but another last-minute selling pulled shares lower. The PSEi had a more muted slide today of 0.1% to 6,539, extending declines for a second day. But overall, this week, shares still managed to pull off a recovery after that downturn last week, increasing by 4.3% over a 5-day period. But I want to draw your attention first to a couple of stocks here, specifically those that will be added to the benchmark and those that will be taken out. Let's start with the newest members here, AC Energy and Converge, both stocks rallying from the moment the bell rang on Friday. As you can see right here, you have AC Energy jumping 4.7%. Its fifth day in the green. AC Energy in this chart at least is represented by the white line here. As you can see, the stock is now valued at 9 pesos and 15 centavos a piece. But the broadband provider's rise eclipsed that as it soared 11.5% today, as represented by the orange line. If we can just show the chart here, that is its biggest climb yet since it began trading October last year. Converge now at 26 pesos and 65 centavos. Again, if we can just show the chart here, you can see here Converge represented by the orange line rising as much as 11.5%. Now, these two stocks will be replacing Emperador and DMCI on the main index starting August 16. And that leads us to the liquor maker and the construction firm. Emperador plummeted today as by 8.9%, extending its retreat for the third day. Emperador here represented by the orange line. Emperador now at least at 13 pesos and 16 centavos a piece. DMCI likewise lumping by 6.1%, as you can see in this white line right here. DMCI now at 5 pesos and 73 centavos a share. Now, off to the REIT space, let's zero in on AREIT. The pioneering REIT offering in the country registered a 49% growth in revenues at 1.36 billion pesos, driven by contributions from new developments like the 30th in Pasig and parts of Laguna Techno Park, teleperformance in Cebu, and rental escalation of existing leases. Net income for the first half is also higher by 31% to 1.34 billion pesos. AREIT is just days away from completing its full year of REITs operations, saying they have delivered consistently on their targets and that they are positioned for growth with new assets coming online. AREIT today at least, let me just change the chart right here. AREIT at least for today is now at 36 pesos and 25 centavos a share, up by 0.7%. Here are other headlines we're keeping our eyes on. The government is looking to ramp up vaccination as Metro Manila enters a 2-week lockdown. The National Task Force earlier reported that some 10.7 million Filipinos are already fully vaccinated. Another 12 million of the total 109 million Philippine population have gotten at least a first dose. Meanwhile, the Interior Department blames fake news over the chaotic vaccination turnout in Las Piñas and Manila. The DILG has instructed the PNP and the NBI to find the people responsible for spreading false information that only vaccinated individuals will receive cash aid and will be able to leave their homes. However, the department is asking for patience for possible delays in the distribution of cash assistance as they await the funding from the budget department and iron out distribution bottlenecks. No problems in supply amid the ECQ in Metro Manila. This is what the Trade and Agriculture Department assured the public as the capital region enters a 2-week strict lockdown. With this, the two agencies say there is no need for anyone to hoard goods as supply remains stable. The DTI says no price increase will be made throughout the ECQ period. The DA, meanwhile, is looking to offer door-to-door services with its mobile palengke to provide cheaper and easily accessible goods to Metro Manila residents. Essential establishments like groceries, supermarkets, pharmacies, and banks will remain open during the 2-week period manned by a skeleton workforce. The central bank ensures continuous banking service operations. With NCR returning to ECQ, how might that affect the prospects of the residential space, which Colliers believes is still up for some recovery this year? Let's find out from their Associate Director for Research, Joey Bondoc. Good afternoon, Joey.
Hi, Jess. Good afternoon.
Okay, so Joey, do you see the 2-week ECQ having any impact on the sector's growth prospects? And should that be extended? Will that in any way hamper the delivery of new units, whether it be in the office or residential segments?
Initially, its impact will be felt in the office leasing market. Note that we have clients whose leasing expansion plans are dependent on the government's lockdown announcements, restrictions imposed all over Metro Manila. So, when the government announced the ECQ implementation from August 6 up to 20, we heard some clients being a little jittery, and their expansion plans in terms of leasing are now on wait and see. So they're likely to pause their leasing requirements and then decisions to take up more office space once we're over this ECQ implementation all over Metro Manila.
Can you give us at least an idea as to which sectors these offices are from?
These are mostly traditional companies. Note that during the pandemic, the BPO companies, the call centers, were really able to adjust. So they implemented work from home. Traditional companies are, I would say, the profiles of tenants that are now taking a wait and see and are now waiting for the government's implementation of a more eased lockdown restriction all over Metro Manila before they really occupy more office space across the capital region. The BPO companies basically were able to adjust, so they were
Mhm.
implementing already work from home schemes. So I would say that it's the traditional companies that are now will likely be affected by this stricter COVID-19 restrictions. They're likely to take a pause in terms of leasing more office space.
Okay, Joey, while we're at it, can you give us an idea how's the demand now for office space? I mean, you're projecting new supply to come in lower at 847,000 square meters. Why are the developers being more prudent when it comes to adding stock?
Because previously, Jess, they realized that if they overbuild, that will result in a significant drop in rental values. So, drop in rental values as well as increased significant rise in vacancies all over Metro Manila. And we saw that during the Asian financial and global
Mhm.
financial crisis. So, they really didn't adjust in terms of completion, and that was more evident during the Asian financial crisis. That's why we saw a much significant drop in rental values during the Asian financial crisis. Now,
Mhm.
having learned that lesson during the AFC, the developers were somehow able to adjust during the global financial crisis. But as you can see here, we're projecting about 850,000 square meters of office space. What's notable is that there are buildings due to be completed in 2021 that are significantly pre-leased already, 70,
Mhm.
80%. So that is pretty encouraging. And these are primarily BPO companies, um, uh, business process outsourcing companies, and even professional services companies. So that are implementing a mix of both work from home and on-site work. So we believe that with these encouraging figures from some of these buildings that are likely to be completed over the next 12 to 24 months, developers are unlikely to hold off or delay much of their pipeline for
Mhm.
2021 and early 2022. So I would say that the supply figures that you're seeing right now, starting at 850,000 square meters in 2021, is pretty stable and pretty safe already in terms of the amount of transactions that the market is expecting for the next 12 months.
Okay, what's very notable about your response, Joey, is that much of the demand is still being driven at least by the BPO sector.
That's right.
What does
That's
that
right.
say about the other sector, POGOs? I mean, how much of the weakness at least is being driven by this sector, and should we be counting out the sector right now, or are we still anticipating some recovery here for POGOs?
Unfortunately, Jess, the Pogo sector is already out of the picture, and we do not see Pogos coming back to the Philippines in the immediate term. And in fact, so far, they've vacated a lot of office space already. As you can see here, their share to total office space across Metro Manila is down to 6%. During their peak, they were at about what, 12 to 13% of total leasable space here in Metro Manila, and they've really shed off a lot of office space already. They've returned to China, and they've returned a lot of office spaces in the market. They're unlikely to return to the Philippines, and this is a major contributor to the rising vacancies across Metro Manila. And what we have been seeing also is that the level of demand is back to pre-Pogo level. Previously, we would record more than 1 million square meters of net take-up. Now we will be glad if we record about what, 500, 600,000 square meters of net take-up across Metro Manila. And as you note, we have been recording negative net take-up of office space across Metro Manila, meaning the amount of vacated office spaces has far outstripped the level of office spaces that was
Mhm.
absorbed or taken up in the Metro Manila market. And we saw that starting 2020, and based on our projection, unfortunately, the vacancy is likely to increase for the remainder of 2021. But we believe that we're likely to see green shoots of recovery by 2022, and that will be anchored by strong pre-leasing in selected buildings across Metro Manila, which will be completed end of 2021, and will be in the market already starting 2022.
Okay, given that you at least are seeing a bit of a recovery in the office segment come 2022, does that mean at least that you still see offices being relevant still even in a post-pandemic scenario?
Oh,
Especially now,
definitely.
you have a lot of offices are returning or going full mode once again with the remote setup.
Definitely, Jess, because we believe that the office will remain or continue to play a pivotal role in the real estate requirements of a lot of companies. Employees find it more productive to work in a traditional office setup, and a lot of employees find it more productive. They get to
Mhm.
brainstorm with their fellow employees, and even some of our clients say that. The productivity that they achieve from their operations when people are working from home or working on site rather is really much higher compared to their employees working from home, and that's the reality that we see on the ground. Companies becoming more productive if they are working on site in a traditional office space, and we
Mhm.
believe that office, even during or beyond this COVID 19 pandemic, will play a crucial role in the central business operations of a lot of companies, enabling employees to brainstorm, to exchange ideas, and office will, really have this central role in the real estate strategies of companies. That's why one of our key recommendations for developers is to really maximize and highlight this benefit of being in a traditional office to lure more companies, more BPOs or traditional non-outsourcing companies to still continue occupy office spaces.
All right, at least still some bright prospects there for the office space coming into
Definitely.
2022. Again, thank you very much for your time this afternoon. Joey Bondoc, Associate Director
Thank
for
you.
Research of Colliers.
Thanks,
Thank
Jess.
you, Joey. And those are the biggest stories this trading day, August 6th, 2021. Catch Business World live again Monday next week at 9:30 a.m. for the market open and 3:15 p.m. for the market close. I am Jes Delos Santos. We are One News. Mask on, wash hands, and stay safe. Philippines, have a great and safe weekend.